can households across Nigeria save from diesel and petrol costs by switching to solar energy? Good morning and welcome to Business Week. So much has happened in the week globally, but as usual, don't worry. If you couldn't keep up, that's why you've got Business Week. Over the next hour, I'll be bringing you all the top business and economic stories that made global headlines with expert insights from my guests. I'm Rolake Akikugbe-Filani. So we're going to start this morning looking at what happened to global energy commodities, starting with Brent crude, which was up by $77. WTI also up by $77, up to $77, sorry, up 1.58% and 1.70% respectively, and all the other commodities, natural gas and RBOB gasoline up. So markets not doing and ending the week too badly. You must have heard the news that Saudi was going to extend production cuts well into August. It's producing about 9 million barrels. And you probably also heard that Russia is going to cut production by almost 1 million barrels. So still a bit of tightening in oil markets, but nevertheless, some bullish sentiments there amongst the trading community. Let's look at what is happening to the Nigerian stock market now with the All Share Index. The All Share Index closed the week yesterday at 63,040.87 points. It was up 165 basis points. More than 10,000 deals struck, a volume of 1.2 billion naira, and about $18 million, that's 13.87 billion naira in value. Interestingly, there quite a lot of deal activity from FBN Holdings, GTCO, Zenithco, Dangote Cement, which was also one of the biggest movers on the stock exchange as at Friday. And of course, market capitalization at 34.32 trillion naira. It's worth bearing in mind that the All Share Index is up by 23% over the course of the last year. The first time the index is actually higher than the rate of inflation. Well, let's look at what is happening at stock markets in other parts of the world. Euro Stock 600 was up 10 basis points to 447. Not a big move. I think the market is still trying to shake off concerns about monetary tightening by the European Central Bank and central banks around the world. Some bearish sentiments on the FTSE 100 in All Share Index in London, and of course same with the Spain index, IBEX 35, but Paris and Germany up by 48 basis points and 42 points respectively. So not a bad closeout to the week in parts of Europe. What's Wall Street saying? Pretty much the same thing. The Dow is down. I think the signals we've been seeing from the Fed Reserve, statements by Jerome Powell, suggest that the bears may be here to stay and play in the market for a while. Dow ending down 13 basis points on the market, closing at 33,875.93. S&P and NASDAQ, which mostly reflects tech stocks, didn't end the week too badly. It was up 41 basis points. Well, here are my top business picks from around the world this week. First, we go to Nigeria. Well, Nigeria's Q1 debt servicing costs for rail exceeded revenues. If you know anything about the rail modernization project that the government has, the Idu-Kaduna project, the Abuja Light Railway, the Lagos-Ibadan Railway, we've seen some tempering in passenger numbers. Passenger numbers are actually down from the first quarter of last year, down by more than 50% at 53%. And it's not just passenger numbers that are down, but also revenue numbers are also down by about 60%. So that's a whopping change in the picture from what we saw last year. Debt servicing costs for those long-term infrastructure projects have also been quite high. The government has paid out about $62 million on debt service. Most of those are Chinese infrastructure loans, by the way. What else do we have in the market? Afrexim Bank is commencing the commercial launch of its Pan-African payment settlement system. We spoke to Benedict Orama, president of Afrexim Bank, actually earlier in the week, my colleague Rotu Sodiri, and he talked about the fact that there's about $5 billion worth of trade value that's being left on the table because of the challenges around currency convertibility for many African currencies. So the launch of that Pan-African payment system would make it easier for traders who use almost 42 different African currencies to trade across borders. And of course, that should help the numbers increase on intra-Africa trade. What else do we have? Nigeria's president has suspended a 5% telco tax and deferred the 2023 Finance Act. The president actually suspended that tax by signing an executive order. We saw taxes that were going to come out, a green tax on single-use plastics. We also saw taxes that were going to come out on exports and imports and vehicle importation. But these executive orders have essentially deferred the kickoff date for that, in keeping with the 2017 national tax policy. And the government says it would like to give more advance notice to businesses and stakeholders that will be affected. So interesting times. It's probably also timed to give room for consultation and dialogue between the government and the business community. What else do we have? The DRC and South Africa plan to revive the $14 billion Inga 3 hydro dam. That project is meant to see supplies of power to neighboring South Africa from the Congo River, as well as to mines in eastern DRC. And it's going to kick off again. It's been on hold for about 3 years, since 2020, when the World Bank said the project did not meet some of its criteria for funding. It'll be interesting to see whether that goes forward, but potentially transformational for the Central Africa region, the Great Lakes region, and for Southern Africa in terms of electricity supply. We've also seen that cocoa futures have soared to a 13-year high in West Africa, trading as at Monday for more than $2,000 a ton. And of course, Ivory Coast farmers have spent 2.24 million tons to ports this season since the start of July. We've also seen El Nino conditions affecting supplies and the supply chain in the West Africa region. So a tight cocoa market, and futures are trading at a 13-year high. Finally, Chinese regulators are still pursuing their clampdown on Ant Group, fining it $1 billion for financial violations. Of course, we know who was the founder of Ant Group. That's Jack Ma, who's also the co-founder of Alibaba. Now, Jack Ma has been in the spotlight for the last 3 years after, on the eve of a planned $37 billion IPO in China, he criticized Chinese regulators. The government has moved against his firm. He's had to dial back on a lot of the plans for expansion globally and locally there. And of course, that has actually triggered a clampdown across the tech sector in China from Chinese regulators. So interesting stories around the world. We're keeping an eye on everything that's happening. Don't go anywhere. Let's see what else is making headlines this week. First, to Nigeria's domestic debt. According to the most recent data on public debt published by Nigeria's Debt Management Office, the federal government's total domestic debt stock increased by 11% quarter-on-quarter and 23% year-on-year to 24.7 trillion naira as at the first quarter of this year. The government's share of domestic debt represents an 82% of the total debt stock of 30.2 trillion naira, with the balance comprising domestic debt of the state governments and the Federal Capital Territory, Abuja. The government's total domestic debt share is equivalent to 12.4% of last year's GDP. Now, on Nigerian subsidies, Nigeria will save more than 21 trillion naira, that's about $28 billion, in 2 years, after scrapping gasoline subsidies and allowing its currency to weaken. That's according to the World Bank. The savings will help the government cut its record fiscal deficit and a debt service burden that surpassed revenue in 2022, the World Bank said in a report. The budget shortfall will narrow to 3.9% of GDP by 2025 from 5.1% this year, according to that same report. The report also forecasts that Africa's biggest economy will expand 4% from 2024 should it implement urgent required reforms. Nigeria had for years resisted calls, of course, by the World Bank to do away with the fuel subsidies and the multiple exchange rates that had stymied growth. So interesting observations there from the World Bank and interesting forecasts. In other news, Nigeria's President Bola Tinubu has approved the establishment of a presidential committee on fiscal policy and tax reforms. In a statement by Dele Alake, the committee will be chaired by Mr. Taiwo Oyedele, a renowned expert in fiscal policy, taxation, and economic matters, who currently serves as a fiscal policy partner and Africa tax leader at PwC Nigeria. Comprising of experts from both the public and private sectors, the committee aims to achieve a minimum of 18% tax to GDP ratio within the next 3 years without stifling investment or economic growth. The move came barely 24 hours after the president signed 4 executive orders to ease the tax burden on businesses in the country. Tesla on Sunday last week said it delivered a record number of vehicles in the second quarter, topping market estimates as price cuts and U.S. federal credits help make its electric vehicle more affordable. The company handed over more than 400,000 vehicles between April and June, up 10% from the preceding quarter and 83% higher from a year earlier. The Bank of England is looking at plans to force more international banks to set up subsidiaries in the UK. The move could reduce the thresholds requiring foreign banks with corporate business in the country to set up subsidiaries with their own capital and liquidity. The bank is considering this as part of a review of the dramatic collapse this year of Silicon Valley Bank. Subsidiaries such as the one Silicon Valley Bank had in place in London will enable local regulators to seize control of failing banks rather than leaving their fate to the discretion of their parent company supervisors. Well, interesting times in the social media tech world. Twitter has threatened to sue Meta over its new Threads platform in a letter sent to the Facebook parent CEO Mark Zuckerberg by Twitter's lawyer Alex Spiro. Meta, which launched Threads on Wednesday and has logged more than 30 million, actually coming up to 70 million signups, looks to take on Elon Musk's Twitter by leveraging Instagram's billions of users. Spiro, in his letter, accused Meta of hiring former Twitter employees who had and continue to have access to Twitter's trade secrets and other highly confidential information. Well, that's all for the market roundup.